Good morning. The truth about FHA loans and what most buyers don't understand. And if you've been told you need perfect credit and 20% down to buy a home, that's not entirely true. So, FHA loans, they're backed by the Federal Housing Administration, FHA, and they are one of the most powerful tools available for home buyers, especially first-time home buyers, self-employed borrowers, and those who are working on rebuilding their credit profile. But here's the reality. Most people misunderstand how FHA loans actually work, and that misunderstanding costs them opportunities. So let's break it down the right way for your benefit. What is an FHA loan? Well, an FHA loan is essentially a government backed mortgage that's designed to make homeownership more accessible. So instead of the lender who funds the loan taking on all of the risk, FHA will insure the loan for default, which allows lenders to offer lower down payments, more flexible credit requirements, and higher debt to income ratios. And those are really the top three benefits. So, FHA loan benefits that most people underrate a low down payment, as little as 3.5%. You don't need 10 to 20% or down or more. We can do loans with a 580 credit score with a 3.5% down. But if you're in the 500 to 579, you're going to need 10% down. And this is a game changer for buyers trying to get in the market sooner. Two, flexible credit requirements. FHA loans are designed for real world borrowers and not perfect credit files. So you have prior late payments. Make sure they're not mortgage payments, but it's still possible. Do you have collections? It's still workable. Do you have lower credit scores? Often still get approved. The key is your overall profile and the compensating factors that we can show. Three, higher debt to income or DTI allowances. While conventional loans tighten up around 43%, FHA can often go above 50% to a max of about 57 case by case. And this allows higher purchase power. And if it's structured correctly, you can win. Four, it's an assumable loan advantage, which is an underrated strategy when market interest rates go much higher. FHA loans are assumable, is the point. So future buyers could take over your lower interest rate, and this could make your home more valuable in a higher rate market. And this is a strategic exit advantage that most buyers will miss. So let's talk about some downsides. And these are things you need to understand to make sure it's the best product for you. One is mortgage insurance, or MIP. FHA loans will require an upfront 1.75% in annual MIP monthly payments included in the loan. So unlike conventional loans, FHA MIP often lasts for the life of the loan, whereas in conventional it will go away. Two is there's property standards. Home must meet FHA appraisal guidelines for safety, livability, and structural soundness. Fixer uppers may require additional strategy, like a renovation loans, and FHA offers a renovation loan. Three is loan limits. FHA has county-specific loan limits. So in markets like Houston and surrounding areas, this still covers a large portion of the entry-level and mid-tier homes, but it's really not designed for luxury homes. So the biggest FHA mistake buyers can make. Well, most buyers focus on, what's the rate going to be? And smart buyers will focus on how is this going to be structured so we can get approved. And this includes payment strategy, making sure you can afford it, your exit plan, whether you're going to refinance the loan later or just hold it for the life of the loan, but also your projected equity growth and your future flexibility to refinance. The point is, structure beats rate every time. And when FHA loans make the most sense, and this FHA loans are really ideal for first-time home buyers, buyers with limited savings, self-employed mortgage borrowers, and credit rebuild scenarios, or buyers planning to refinance later. So the pro strategy is FHA refinance play. And a smart move many investors and buyers use is they buy with an FHA low down payment mortgage. They build their equity and improve their credit, and then refinance into a conventional loan later and potentially remove your mortgage insurance at that point. And this turns FHA into a launch pad or stepping stone and not a long-term limitation. And that's the way you need to look at it. So the final thoughts is that FHA loans aren't just for beginners. They're a strategic financing tool if used correctly for a lot of folks. And the difference between a good deal and a great one is understanding the structure and why it's useful, and not just the qualification portion of it. That is it for the day. I'd love to talk to you more. Please visit my website, billrapponline.com. You can figure out how to get a hold of me and we can chat. Take care.